This is the Daily Market Comment by Harlambos Bisuros. I'm Maria Pachurdes. Thanks for joining us at XM.com. The euro rebounded strongly after ECB policymakers appeared at the central bank's annual economic forum in their hawkish suits. Setting aside recession risks, most officials said they expect to raise rates again at both the July and September meetings, with President Lagarde noting that inflation has entered a new phase that could linger for some time. She also added that it is unlikely that in the near future they will be able to state with full confidence that interest rates have peaked. This confirmed investors' view that at least another 50 basis points worth of rate hikes will be delivered before the bank takes the sidelines, while remarks by Governing Council member Martin Kazaks that bets of rate cuts in early 2024 are wrong prompted participants to push such bets back. The ECB conference continues today with more speakers on the agenda, and the highlight perhaps being a panel discussion between ECB President Lagarde, Fed Chair Powell, BOE Governor Bailey, and BOJ Governor Ueda. Japanese yen continued to suffer despite warnings by Japanese authorities that they could intervene to stem losses, and despite the summary of opinions of the latest BOJ gathering, revealing that a member called for an early revision to their controversial yield curve control policy. Intervention warnings were repeated today by Japan's top currency diplomat Masato Kanda, who said, "We are closely watching currency moves with a strong sense of urgency," and yet the yen did not receive any boost. Perhaps traders are willing to continue selling the yen until dollar-yen hits the psychologically important 145 zone, which many think could trigger intervention. The Canadian dollar lost ground as well yesterday after data showed that inflation in Canada eased to its lowest pace in 2 years, while the Australian dollar tumbled to a 3-week low today after monthly data revealed inflation slowed to a 13-month low in May, adding credence to the view that the RBA is unlikely to push the hike button in July. U.S. equities rebounded on Tuesday, and what encouraged investors to buy may have been upbeat data showing that new home sales surged in May and that consumer confidence rose to a 1.5-year high in June. Data soothing investors' worries about an imminent recession and expectations that the Fed may soon end its tightening crusade are a blend that encourages stock buying, and with the tech sector dominating the recovery from the October lows, expectations of accelerating growth for tech firms in the quarters and years ahead could keep the uptrends intact for a while longer. This was today's Daily Market Comment. Thanks for joining us at XM.com.